trade blueprint. The trade blueprint is really going to outline the steps that we take as we plan out our trades, the steps from start to finish. There are steps that we take occasionally and steps that are taken on a recurrent basis. The occasional steps are taken on a periodic basis, annually, quarterly, monthly, something along those lines. Whereas the recurrent steps really have to do everything with the trade. Under the occasional steps, we're going to define our purpose, and really this is going to determine the duration of the trade, how long the trades that we're going to be taking will last. We're going to set our reward and risk rules, how much we're willing to risk per trade, how much of our account we're willing to lose on any given trade. We'll create a watch list of financial products to analyze as we go into the markets. And on an occasional basis, we will review our results. And this is really a key component here to bettering ourselves as traders. Now, when planning the trade, we can really break down these steps into what we do before the trade, during the trade, and after the trade is closed. So before the trade, we're first going to be checking any reports that are coming out that could affect the market that we're trading. Our first step is going to be to set the curve, and we do that on the higher time frame. Next, we'll go to our lower time frame to identify the zones. Thirdly, we'll check the trend on our intermediate time frame to see in which direction price is moving, in which direction it's trending. The next step is going to be to score the trade by assessing the odds enhancers for the zone. Once we've scored the trade and we have an opportunity, it's time to sets trade. Sets being the stop, entry, target, and position size. So these are the four components that we'll need to place the trade. And once we have these, we can go ahead and place our order. Now, once that order is executed, it's our job to manage the trade. We need to be monitoring any reports that are coming out that could affect the movement of price or could affect our trade. We'll want to be aware of that. Once the trade closes, it's crucial that we log our trade. This is going to help us review our results, see how we're doing. We've just seen this in a tabular format. Let's look at it graphically. We're going to start by defining our purpose. This is going to determine the time frames that we're going to be using when planning out our trades. It's key that we set our reward and risk rules per trade before the trade begins and on an occasional basis, because as our account grows or maybe diminishes, we'll need to adjust our risk accordingly. We need to set how much money we're willing to lose per trade, how much of our account size we're willing to risk per each trade. We'll also create a list of products that we're going to analyze as we go into the charts. So now before the trade, we're going to go through those 6 steps to placing the order. Once we have the order, we really have 2 options here. We could have the order executed right away, or the order could be pending, in which case we're going to wait until that order is executed. Once executed, the trade is open, and it's our job to manage that trade according to our trade plan. It's also key that we monitor any reports coming out, because these reports could influence price. And so we'll want to be aware if there's any potential reports coming out that could affect our trade. Once the trade closes, the next step is to log the trade. This is a crucial part to reviewing our results. And reviewing our results is really the only way that we can get better as a trader. So it's key that we log our trades so that we can see what we're doing right, what we're doing wrong, what can we fix to better ourselves as a trader to become more profitable. Let's take a look deeper into the 6 steps we take before the trade. We're going to start out by checking any reports coming out for that day, any economic news announcements, earnings reports. Hey, maybe the president's speaking, maybe there's a Fed announcement. We want to be aware of all of these announcements coming out that could affect price. We're going to begin by setting our curve, and we do so on the higher time frame. From there, we will go to our lower time frame to identify our zones. Now, when we go to the lower time frame, there might not be a zone, in which case we have no trade and we'll either move to a different market or wait for another day in this market. If we go to our lower time frame and there is a zone, we'll then compare the zone's location in the curve, and that could be high in the curve, that zone could be in equilibrium, or it could be in the low end of the curve range. Our next step is to check the trend on our intermediate time frame. When we check the trend, there's really 3 possibilities that we have: an uptrend, a sideways trend, or a downtrend. Now, with the trend direction and the zone's curve location, we're going to plug that into the decision matrix, which is then going to give us the action that we're going to take. Once we have that, we're going to score the trade out. And we're going to do that by assessing the odds enhancers for the zone. If the odds enhancers score is weak, well then we have no trade. We don't want to put our money on the line if we don't have a probable trade setup. If the odds enhancers score is strong, now we're talking. Now we're in business. It's time to determine the 4 key components to ultimately place our order. And we have the SETS acronym for that: our stop, our entry, our target, and our size, our position size. Once we determine those 4 components, now we can go ahead and place the order.